Audio check real quick. See if I can hear myself. All right. So I'm gonna live stream the review I was gonna do. It usually takes me so much time to do these things. The between the compression software that makes the video for you guys to be able to see it on YouTube, then putting it up on YouTube, and they do all their business with it. It just to save some time. I'm probably gonna have some things in here that I would normally want to edit out. You're just gonna have to just accept it, okay? I'm really short on time, but we're looking at the dollar index, daily chart on the left-hand side. We traded up into nothing here is going to be time sensitive, so don't be upset with me if you don't get the alert from YouTube or I didn't tweet it or something to that effect. It's just for my benefit to get it done quickly. But we have a old buy side balance, sell side efficiency, and that's we're stuck inside that right now. So it hasn't really done much in regards to moving beyond that. There's buy side resting here, and then there is the consequent encroachment of the suspension block in here. We already traded there, so any movement back down in would be problematic in my opinion because we've already done enough in here for the suspension block to yield its help in terms of supporting prices ending up into higher prices. So I don't want to personally see if dollar stays firm. I don't want to see this area in here give up the ghost. I don't want to see anything traded down below consequent encouragement. I don't even want to see it trade back to it at all. Now, can it touch the lower quadrant of that daily buy side balance sell side efficiency that's shaded in pink here? Can it do that? Sure can. But I'd prefer it not do that like it's done so far. See how it's come down real low to it, but it hasn't done the actual touch. So that's good. And you're going to hear my puppies in the background because Piper's outside right behind me and she's wanting me to go outside and play with her. She's a little squeaky toy. So I can't do anything about that. These are all things I would usually pause the video and edit it all out, but I can't. I don't have the luxury of doing that today. So here's the business on the 5 minute chart dollar index. And we came down, cleared some sell side here, there, rallied up. We had a breaker that's normally a bearish structure when it's like this. And when we trade above it, it acts as an inversion breaker. We see that traded here. And they left relative equal highs up here. So this to me, you know, it's kind of tricky to be honest with you because we have these on the buy side, but we also have the sell side down here. So that's why I'm telling you, dollar index is kind of like it can go either way, and either side getting hit here or here could send it the other direction to get the opposite liquidity. I'll give you an example of what I mean by that. It could come down here, take this liquidity, and then come all the way back up and take that. Or it can come up here and grab that and then go down here. So it's kind of like a if then. If it does this, then I'll do that. If it does that, then I'll do this. So I don't trade dollar index, but right now, with all the things that's going on around the world, I'm surprised that dollar is where it's at right now. To be honest with you, with gold, surging above 4,000, plus, it's just well, it's a little against the grain for a dollar to be performing like it's doing here. I would expect it to be in a smaller consolidation or trading lower. That's what I would expect, but it's not doing that, which is in a way kind of like a decoupling. And it's not surprising because there's so many things going on geopolitically, economically. Our government's a bunch of clowns. All of those senators should have their pay stopped and frozen. If they want to shut the government down, they should be part of the government shutdown. Their pay stops. They want to stop the military paychecks and whatnot. The federal employees, if they get the pay cut stopped, then the senators should have to stop. And then we'd probably get things done. But there's so many things going on. It is very difficult to just lean on the dollar index because the dollar index is not doing anything that you would expect it to do right now, given the climate, given the technicals of everything else that's going on in the marketplace. So, anyway, um, those are the two pools of liquidity I'm looking for. So I'm kind of neutral on dollar. I want to see it stay firm, but if it goes lower, it goes lower to take this sell side. And that's the only interest I'd have. If it goes down below that and then really starts to fall out of bed, then I think that we'll probably see all-time highs resume in equities. And I'll get to that in a minute when we get to the Nasdaq part. But I want to kind of like get through this stuff. So we're looking at euro dollar next. All of this is just my opinion. So none of this should be used for trading purposes or anything like that. Read the disclaimer down in the video description. It's always there. So the business here on the euro dollar, we had a buy sign balance, sell sign efficiency. I sent these charts in the levels I was interested in on Telegram this morning because I started thinking to myself, like, if I don't share the levels I'm interested in beforehand, it won't have the same impact I hope would have when I shared the analysis, or not the analysis, but the call out on NASDAQ on X. So if you're not following me on X, I'll do my best to try to remember to put the link to the post I'm going to refer to here in this discussion. But over 700,000 of you saw me tweet about it and call it into the tick today. So looking at euro dollar, we're sitting inside of a pretty difficult sloppy range in here. I think personally, because we've made it jagged on the upside here, a deeper retracement down into this buy side imbalance, sell side efficiency is warranted. I think it would be helpful. But reverse the script for a second. Play devil's advocate in your own analysis. And this is what I like to do. If I'm wrong, how would I be wrong? And what would it be going for if I'm wrong? Well, we have relative equal highs and pairs that are real smooth. And that's really sold the idea that that's strong what? Retail resistance. And you can already see they're trying to muscle their way up in there. So we dug down into this buy side imbalance, sell side efficiency on the daily charts already. And if we can muster the strength to get back above the immediate rebalance I showed here on the daily chart, it's trading at essentially the 116.49. So that's above these, obviously. So if it runs that and goes above and closes on closing based on the daily chart above the immediate rebalance, then we're probably looking at some kind of internal shift that would potentially send dollar lower or stay in a very narrow consolidation, permitting the euro and cable and other FX pairs to move without its participation, as you would expect it to be the opposite. Whatever the currency like euro, cable, yen, whatever, they would go one direction and dollar would go the other. That's the normal dichotomy between them, but it's not always like that. Sometimes the dollar is held and then the other currencies are allowed to move around. And when it's like that, you will see the crosses like euro pound, euro yen, Aussie yen, all the non-dollar based currency pairs, they will do exceedingly well. They'll have a whole lot more movement and they'll have freedom to allow the market to do whatever, wherever it wants to go, it'll go there quickly and it'll do it dynamically, all the while the dollar index doesn't do anything at all, which sometimes is confusing for someone that's trying to trade Forex, but that's a condition that can happen in the marketplace. So moving on into, I kind of like quickly want to get into the Nasdaq because I'm not so much interested in Forex. I know the majority of you are Forex freaks, but I'm not touching those currency pairs. But I promised I would give my opinion on them for whatever it's worth, and you may not think it's worth much at all. That's okay, it's free. All right, so here is the cable market. Okay, and I shared these charts in the Telegram channel this morning, and you can see this discount. I'm sorry, this Yeah, it's a discount array, but it's a premium wick. So when price is up here and it's trading down, the natural tendency is to think, okay, well, classic support and resistance theory would be this down here is where they would expect price to trade down to that low and then bounce or break below it, retest and keep going lower. I'm not support and resistance. School of thought from ICT would be while you're up here, it might want to trade down to this candlestick's open, which is to change in the state of delivery for the order blocks furthest discount candle. This is the lowest one in the series of all these down close candles. So that would be a change in the state of delivery. It would be reasonable to expect that, but I'm not. If I'm looking for lower prices, I would look for that as like a speed bump, maybe a mile marker. But I would want to see it then get into this wick. Okay, so that's the reason why I shared these levels in here, and also this one. This would be the one that you would use. I mean, bring it a little bit wider so you can see it. I know some of you guys complain, but you should be able to zoom in on the playback. If not, I don't know why you wouldn't be able to. But here is the premium wick. When price is up here and it's trading down, that's going to act as a inversion. So if it's premium on the candlestick, but price is above it, the algorithm will see that as a discount array. And we treat wicks like gaps. So in full theory, it would look like this. All levels for this. And I'm just going to take this one off just for clarity's sake. It might be a little too many things on the chart for you to follow along. But in here, this premium wick is a level that the market will draw into when price is above it. So if market price is above this specific candlestick, and you're probably thinking, well, why am I using this one and not this one? Because isn't this the tallest one, the highest one? It is, but you got to think in terms of when prices are high and the market price is above every PD array that you would have indicated on your chart. This is the lowest wick. So this would be the most in terms of a premium wick, every wick above the candlestick's body. This would be the candlestick that you would, or I would rather, anticipate reaching down into if there is no interest at all trading to consequent, I'm sorry, change the state of delivery. See, that would have been an edit point right there. The opening of this price here would be to change the state of delivery. So for order block PD array, that would be the level to draw to. But what happens if it doesn't want to go down there? Then you have to consider every one of these wicks, and since there's a series of them, you want to concern yourself with what's the lowest one it could trade to, and that's this one here. There's nothing wrong with grading this wick here, and if you do it, you'll see there's levels that it's tapping and using. But in terms of a deep retracement moving lower, my eye goes right here because that's going to be treated as a gap. Moving over to market price now, you can see we traded down to the lowest quadrant, but not the low of that wick. Piper's really trying to get my attention. I'm not sure if you guys can hear her squeaky toy, but it's driving me nuts. But here's the open of that candlestick, and it's this price here, but the lower quadrant, not the high, not the upper quadrant, not the consequent encroachment, but the lower quadrant level at 1.32495, that level there is exactly what you see delivered to here. And price rallied above, and then we use the high of that wick right there, which is at 1.32822, hits it here, and then it rallies and starting to run back up. So looking at these highs here, we have potentially a high probability candidate for drawing liquidity because we have the lower high to the right than that one. So your buy side should be drawn on at around the 133.70 level or thereabouts. And then your sell side would obviously be the low here and then into this candlestick's open. And then you would grade that wick down here if it starts to break down lower. But we've had several attempts now. We hit the high of it, this wick here. We hit that one. We went to the upper quadrant, failed to get to consequent encroachment, and then we went through consequent encroachment and went right to the lower quadrant of that one there. And this is a lot of give back. So if I were short, I'd be concerned because we've already done enough reaching down here. So where it's at now, it's concern for short-term bearishness. Gold. I said I would talk about that this week. And let's do that now. I shared again these charts. Let's see. Z is the contract month, delivery December. And you can do everything I'm showing you here. Everything I'm showing you with the futures contract for gold when you're tape reading. We're not trading. I'm not giving you trade advice. I'm not giving you investment advice. I'm not telling you to buy or sell anything. But when you're looking at your levels in relationship to what I'm showing you here on the futures contract, pull up the symbol GCZ2025, like you just watched me do here. And then if you are a CFD trader, if you're outside the United States, because we're not allowed legally to trade them in the US, but I know there's a lot of you that are students around the world that you don't have the luxury of trading the futures contract unless you're trading these funded account companies, which you're still not trading the futures contract anyway. You're in a demo account. But in deference to the folks that are trading CFDs, you want to match up the time candle that I'm anchoring to on the futures contract. Everything I'm showing you here, match that up to the time candle for your CFD. So XAU USD, for instance, if that's what you're going to be trading with, or not trading with, but you're doing your analysis and studying with, that would be how you match this up. Okay. So everything I'm going to show you here, you do the same thing that way. I gave you some hints the other day about using the same times that I use for regular trading hours for equities, and we'll cover a little bit more detail about that in a moment. But the daily chart here on the left-hand side, you see we had a buy side unbalance, sell side efficiency. It's shaded in blue. Notice that it had no interest at all getting down to the upper quadrant. It used the top end of the, which is this candlestick's low. It hit once here, twice, and then said, "I got to go." And that is what you want to see. When you're in a bullish market, when you're looking for bullishness, you do not want to see my fair value gaps traded down into. You don't want to see them go to their quadrants. You certainly don't want to see them go to consequent encroachment. You don't want to see them completely close in. There's so many people out there that think that, I want every inefficiency closed in or it must close in. That's not what I taught. I'm not Chris Laurie. That's what Chris Laurie teaches. That stuff is flawed logic. You have to have inefficiencies left open to indicate what? Strength. And if you're bullish, you want to see inefficiencies not be offered as a fulfillment lower. Because if the premium is real and it's an instrument that is technically undervalued, why would they offer the discount price? They wouldn't. If you had the hottest thing right now, that everybody wanted to buy at Christmas time, would you offer sale prices on it? No. You're going to keep increasing the price higher, higher, higher. Well, that's what the algorithm does. It just keeps offering higher price. And everybody's doing market orders all the time. There's someone out there doing a market order all the time. That's why when I tell you, stop looking at these DOMs, these depth of markets, these ladders, these level two things. There's no advantage in that because the same number of contracts above the marketplace price and below, it's a bracket. There's no advantage. There's no imbalance at all. There's the same number of contracts spread across everything, okay, if you look at it that way. And the only thing you have is a religion believing that that has some kind of insight that's yielding to you the prognostication that you hope it has. And it's just an illusion. Now, when we're looking at inefficiencies like this, we want to see price literally stay open. Because if the inefficiencies can stay open or fail to even touch the quadrant levels and it starts to rally, man, if you're long, that's when you want to start adding to your longs. You want to build in larger positions. That means every time you have a short-term retracement, anything intraday, you want to build that position up, build it up, build it up, build it up, because it's already indicating strength. And if you go back and look at what I said on X, well, if you've been with me for a long time, back in 2016, before Trump was even elected, I said that we would see 3,000, 4,000, and as much as 5,000 gold. And go back. If you're a student of mine, you have all these things in recording. I don't need to find them. You have them. And people were laughing. When I was saying those things, I said, listen, before Trump even got elected, I said he's going to be elected, and they're going to use him as a fall guy. He's going to get the blame for everything, everything. Now, the only thing I was wrong about was his first term. They didn't do it. They built this division between everybody, and I'm getting somewhere with this, but they built this division and they made teams: Team Trump, Team non-Trump. and I'm indifferent. I'm neither. Okay, so I'm staying objective because I don't vote. I've never voted, and my opinion is valid because I'm not part of anybody's team. I have no affiliation with either side. I'm not Democrat. I'm not Republican. I'm not independent. I think it's the same bird. It's the same coin, two different sides. You're falling victim to it, and I don't subscribe to it. I don't fall victim to the left right paradigm. And you can. If you want to be a liberal, you want to be a Democrat, you want to be a conservative, you want to be a hard rightist, libertarian, whatever you want to call yourself, I could care less. But those things, okay, blind us as investors because we have a subscription to the team mentality. And it's real hard as an educator to try to break through that barrier. And I know that when I say certain things, people just don't want to believe it. But in 2016, I said he would be elected. I said he would be used to crash the economy, and he would be the one that they put all the blame on. And it didn't happen in his first term. And then now, obviously, 2020 was rigged, and you can believe whatever you want to believe about, but they've even brought the evidence out. It was cooked. He won this time, and everybody expected him to come in like the white knight and fix everything. But it has a different feeling, doesn't it? A whole lot of stuff's going on right now. And the things that he's campaigned on, I don't see it happening. And maybe you see it, but I don't see it happening. I see a lot of things that are unconstitutional, really. And you can be mad about that. And that's not the point of this conversation. But that idea of separation between the normal, what should be allowed, what shouldn't be allowed, um, it's culminating into a huge problem. It's a storm. All those things are fueling gold. Nobody trusts their money in banks. Nobody trusts their money just sitting in like money market or CDs because you're not getting any interest. And nobody's trusting the dollar anymore, not in the US, not abroad. And the BRICS nations are working towards trying to develop a gold backed currency as a replacement for the greenback, the dollar, because it's the global reserve currency. And they're really trying to remove that. And I personally think that it's going to be successful. It may not be BRICS nations that's doing it eventually, but they have the best advantage, in my opinion, if anybody does at this moment. But eventually, the dollar will be replaced with something. And that's what we're watching. We're watching the deconstruction of that. And all those things is what I talked about in 2016 before he even got elected. And look around, it's happening. I said we'd see military in our streets. We're seeing military in our streets. We're going to see worse things than that. And all of that uncertainty is putting more emphasis on securing it, money, wealth, in gold. And silver is the poor man's gold. And we have just breached the Hunt brothers debacle where they cornered the market a couple decades ago. It was before I started trading, but we're in all time highs there too. And that market can go anywhere, man. Like you have no idea where silver can go. I don't know where it can go. I just know I'm not trying to pick a top in that market, and I'm not trying to pick a top in the gold market because nothing has changed. In fact, everything that's led up to right now, it's gotten worse, and it's on the horizon, potentially even getting more worse than that. So I'm not trying to be a Debbie Doomer gloomer, but as an investor, you have to be able to weigh these things and not lose your mind over the emotional sides of it. Don't come at me because you're a Democrat and you think I said something to offend you. Don't come at me as a conservative and say, well, you should have did this and can't you see Trump's doing it? I could care less. Okay, I really don't care. I'm not going to lose any sleep over it. I don't care if oil goes to $250 a barrel. I'm still going to drive 8-cylinder cars. I'm going to drive vets. None of this is going to affect me. It's not going to affect me. Okay, I will find a way to outpace all their bullshit. I ain't worried about it. But the point is if you're trying to learn how to do this, you have to have a perception that's outside the normal realm of retail. And even if you understood an imbalance in price action, even if you understood, um, you know, valuation and price action, leaving inefficiencies open like this is exactly what you want to see if you're bullish. And when prices is going lower, if it's leaving inefficiencies open and doesn't come back up into them, if it can't even touch the lower quadrant when you're bearish, that's really bearish. Well, in the same sense here, just reversing it, when it's bullish like this, we don't even want to see it trade down in the upper quadrant. And it doesn't do that. And go back and look at the tweet. I just said it a little while ago. So we're going to see 4,000, and I don't see it stopping there. I see 5,000 gold easy. Like I see it. It's no reason for it not to be there. There there's a ton of people that want Bitcoin to go to a million. Okay, and if Bitcoin was supposed to be this isolation from fiat, then it should have never had what it had happened to it last Friday. And you can hate me all you want about that, but that's just the truth. That's when it should have went straight up and did another quarter, you know, whatever percentage you want to call it, just had an extrapolated move. That's what it should have been. That's what it was sold to you as the public. You're believing that's what it's supposed to do. Well, it didn't do any of that, did it? And I know people now that lost fortunes in that trash. And literally, some of them, I don't know these people, but some of them out there that have traded big time, they don't even live anymore. They killed themselves. Now think about that. That's nuts. You're over leveraged, your expectations are too high, you're punch drunk, and you don't want to see it any other way. These markets right now, all of them are in conditions that could literally wipe you out. And I know a lot of you listening are playing these demo accounts because you're trading in funded account companies, which is not even real money. And you think, what's the worst could happen? Well, in certain respects, I guess I can agree with you there. You're only gonna have to pay whatever you pay to reset or what you pay per month to keep the accounts open. But you shouldn't be going hog wild and going in here and trying to, bet the farm on everything, expecting big, lottery wins. Don't do that. You need to have rule-based ideas and things that lean on that you can trust. And one of the things that I found the most trust in is when my fair value gaps form in price action. If they can't draw price down into them and I'm bullish, I'm wildly bullish then. Like I'm really bullish. And every indication post fair value gap not being traded into like it does here, everything past that on an intraday that's a discount array should be considered as a reason to go higher. And you can see the price action here. It's just a straight run up. They're not letting this thing go down. They don't want it to go down. And they've already indicated down here that it shouldn't because it's kept at bay. It won't go to a discount. When this inefficiency right here, let me move this over so you can see a little bit easier. This candlestick's low, this candlestick's high. In between those 2 points, this candle's high, that candlestick's low. This portion of price action should have carried the market down to at least half and then rally. That's a normal bullish market. That's normal. Can it come all the way down, fill that in, and go up? Yes, it can do that. But when it does that, I'm far less bullish on the marketplace. I would want something after it closes the fair value gap in. I would want something over here, create a new shift in market structure on a smaller time frame, and then look for the same event where it doesn't fill in a fair value gap. And then I would resume going in looking for longs. I don't like to trade a full closure of a fair value gap. I like to do that when I'm short. And if it trades down there, that's where I'm trying to take profits. But I do not like to buy a full closure of a fair value gap when it's a buy side and balance, sell side efficiency, and I'm bullish. I don't ever want to go in there and do that. Look at my trades. Do you ever see me executing like that? It's never happening, folks. It's never happening. You learn more from studying my executions than trying to come up with these you know hypothetical. He's doing this. He's doing that. Just look at what I'm doing. I mean, look at where I'm entering. I'm entering at the best places at the best time, and I'm looking at areas where they don't fully close in, or I'm entering just after that's occurred. That's like the biggest tip and hint I could give you as a smart money operator. Like I'm telling you, literally, that is worth its weight in gold. Nobody talks about that. They all want to see these closures. That's not what I've never taught that. That has never been coming out of my mouth. That's never come out. I don't want to take those trades. I don't mean that it can't happen. Yeah, that's sure it can happen. But I'm not going to enter on that basis alone. I want to see it. If it's going to do that, then I want to see it. Give me some more proof. Then it needs to climb to the upper half of that inefficiency. Then give me some kind of a smaller 1 minute, 5 minute time frame, shift in market structure where it gives another fractal form of this bigger buy side and balance sell side efficiency, just done on a smaller time frame. And then if it can fail to fill in that one, then I'll start going in there and following order flow that way. But you just can't go in here and just simply say, well, there's an inefficiency and I'm going to get real, real bullish once it goes there and I'm going to buy that. Because think about it. If it's going to go higher and you want to be in markets that want to go higher, if you're bullish, and if you want to be in a bullish market, you want to be in a bullish market that's going to take off and just run and run and run. If you ain't seeing signatures like this in price action, you don't have an A plus situation where you're buying strength, really. You're just going in there buying something that is no different than support resistance. You don't know if this is going to come down to that low of that fair value gap and bounce. In fact, I'll go so far as to say this. When it does that, I'm admitting to you, when it closes the fair value gap in, I don't know. I don't know if it's going to stop there and go higher, which is exactly why I gave the rules that I give you. I want to see it not fill it. But if I'm in a long and I have a stop loss that's maybe at consequent encroachment or tick below it, and it starts trading below the upper quadrant, I'll kill that trade. Then I'll wait for it to come down and do whatever business it's going to do. And I'll take that loss. It's literally just like paying an insurance premium. It's all it is you're paying an insurance premium. I'm ensuring that I'm not going to sit in a larger loss, but I'm protecting myself and I'm guarding my mental capital. And then I'll wait for what I would rather see is that to show me a willingness to come out of that. If it goes in a lower half, it needs to come back out of that and then give me some supporting structure in a lower time frame where it does the same thing here, a buy side and balance sell side efficiency that does not fill in on a lower time frame. Then I'll hop back on and start building my position up with half the position I took as an initial loss in here, absorbing that because maybe I got a bad read on it. Maybe I was a little too overzealous or whatever. But I don't ever want to be buying full closure of a fair value gap. I don't want that. I want to see them stay open. And in certain respects, that's why you see these nitwits on the internet. When I first started teaching fair value gaps, they would say, "Oh, look, it failed here. Look, it didn't go down there." It rallied. They don't even realize that's exactly what. That's the best case scenario, and it just goes to show you if you listen to morons, you're going to get moron advice. Seriously. And there's so many morons on the internet right now looking for 5-second fame. They just want to seem like they know something. And that's the state of affairs all around the world right now. Everybody's looking for some kind of validation. Coming here to this community, just plug in and be a part of it. Nobody's trying to be better than anybody else. I'm not trying to be some cult leader. I'm just hanging out with you and sharing for free things that I know work, and I prove it to you. I prove it to you, and it costs you nothing. I tell you before it happens, and it works out perfectly. What better situation would you want? There is no better situation. Okay, but if you come here and you put blinders on, or you have selective hearing, or you want to teach yourself from hearing me teach, and you want to cherry pick certain things out of, oh, yeah, it makes sense to me there, but I'm not going to use what he said there because I don't believe that. I'm not telling you lies. I'm not telling you things that aren't factual. I'm telling you things that you can put you, well, let me hold that phrase there. You can bet your bottom dollar if a demo account, quote unquote, that what I'm telling you is the market gospel. Because when I say it, you see it in price. And there's no better indication than that. So when we're tape reading, when I'm telling you over price action, watch this, watch that, this is what's going to do. You want to see this. When it's doing that, it's the same thing I'm outlining here. So when we saw this buy side and sell side inefficiency, BISI, fair value gap, this is the biggest opportunity to see how much strength does gold really have. And this is not limited to just gold. You want to use this same concept anytime you're bullish. Anytime you're bullish on any market, if there's an inefficiency that's visual in the price action, you want to see what's being shown here. An inability for price to get down here. You want it to say, no, ICT. Nah, man. You don't get VIP seating today. I'm going higher. That's exactly what I want. That's exactly what you want. That's exactly what a trader that's going long or wants to be bullish on a particular instrument, that's what we want to see. But you, in your limited understanding, when you come to me, you'll see that as I missed a trade It didn't give me what I wanted because I wanted to buy consequent encroachment or upper quadrant, and it starts to run away. Well, if it's showing it on a daily chart, all you have to do is drop down to an hourly chart, a 15 minutes chart, or anything less than, and look for anything that's bullish at the right time of day. Macro times, you saw that probably in the notes. It's staring you in your face right here. We'll cover it in a minute. Those factors, when they come together, it's just like the puzzle pieces fall exactly how they should be. They dovetail nicely, and then you're on board. It doesn't mean you're going to do it perfectly. You never have a losing trade. I'm just saying that this is what I do when I'm following a market that I'm primarily bullish on. There's lots of times when a market's really, really strong or really, really weak. I missed the best entry I was hoping for because it never even gave me that price. So how can that be a matter of skill? It's not a matter of skill not being on par. It means that if the price would have went there, I would have got that fill. But the fill wasn't offered to the market at all. Nobody was even given that price. So nobody was given upper quadrant, not consequent encouragement. It just went just below the high of that, which is this candlestick's low. So I really want to beat that in your head because a lot of people were asking me, talk about gold, talk about gold, talk about gold. Gold's doing nothing different than any other market's doing. It's following the same stuff I teach. But you have to carry yourself differently with this market because it wants to go up. And there was a young man I think it was last fall or the beginning of this year, really, really young guy. He was on Twitter going at everybody. He was short and gold, short and gold, short and gold. And I was like, "What in the world, dude? Like, I know he's wasted now. He probably deleted his channel off of social media because it literally would have killed anybody. Like, there's no way that nobody would have survived what he was trying to do, even with a demo account. Like every demo account that you could have ever had would have been dusted and destroyed. But gold's doing nothing different. It still does the same things, but here's the caveat to this. Okay, gold is so manipulated. It's so suppressed. They do not let this market go to its real valuation. If it were, if it really was allowed to be at its real valuation, it would put Bitcoin on welfare because it's the world's currency. It's the world's money. Gold. Gold. Only in the Bible it talks about in Revelation, they're going to throw gold and silver in the streets because it will not save them. You know, we might see that day. But right now, it's money. Right now, it's undervalued. Even after what you've seen it do, it's still undervalued. Does that mean it can't have vicious retracements? Sure, it can have it can have a really wild retracement, but it doesn't change the fact that historically, you looking forward from base where it came from and where it really should be on valuation, it's extremely too cheap. The problem is can you afford to buy it at the levels you're looking at right now and weather any kind of retracement? That's the problem. That's what we have to encounter as a trader. But anyway, when it's down here, what was the premium array that it would reach to if it's going to go higher? This high right here. Since this is the highest wick compared to that one, this premium array, when price is down here, if it's going to draw up to this high, before it takes that high, we want to know what levels this wick offers in terms of grading it. So we have the low, which is the close of that candle, the lower quadrant, consequent encroachment, midpoint, upper quadrant, and then the high of that wick. And these levels are being shown here. Now watch, I'm going to give you a tip, okay? I'm going to say this, and people will still watch this video and ask, what's the benefit of knowing this? What's the benefit? And I will say this part to you right now, and it'll go over hundreds of people's head because you're not listening to learn. You're listening for give me a buy signal. Where should my stop be, and where is it going next? That's what you were. That's what you want me to say. And I'm trying to teach you how to read price action so that all those answers can be determined by your own experience, and you'll have the comfort of picking that decision of participating or not participating based on your own understanding, not whatever I say. I'm not trying to tether you or any of you as students to me. Your graduation is, I know enough to do this without your ICT. I don't even watch your videos anymore. Great. That's awesome. That's exactly what I want. I want less people watching my videos because that means I'm succeeding and creating independent thinking traders. That's exactly what I want. And that is not what everybody else wants. They all want you paying them. Keep giving me ad revenue. Keep coming to my courses. Keep buying my bullshit. All that stuff. It's nonsense. If you know how to trade after watching my stuff, there's no reason to come back. I'm not that interesting, I promise you. So these levels carrying over to the right, when price trades up to them, if, now watch, if when we trade up to premium rates, down here, that's this right here. All these moves from these lows here is this just shown on a 5-minute chart. That's this right here. So if it's going to go higher, we've been bullish for a while. At least we would try to see it trade up into this high. That would be the draw on liquidity, the 4,081 level. If that's the case and it's a wick, we grade that. How can we know that a move like this is going to come where it just keeps surging higher? How can we know that's going to happen? Do you have anything that's going to teach me how to expect that? How can we anticipate these really big extrapolations in price action? How can we do that, ICT? Well, what you want to do is you want to go and buy this retail book, okay? John Murphy's Technical Analysis of the Financial Markets, okay? And everything in that book, you want to study it and then learn to fade it. You want to look at it and say, this is 90% likely it's going to fail. And then look for instances where they see price where it went up here like this and then turned and went lower. They're going to see that as resistance. What you want to do using my gradient levels, that's this area right in here. Okay, so now watch. I'm going to zoom in. If the market's bullish, and we're going to say, for the benefit of the folks that have not been with me, maybe you're watching this video, months or years after it's actually being done live streamed. This area here, the market moves off that inefficiency on the daily chart. Then it comes back down in the order block here and then rallies. It starts moving higher until we get up into that daily wick in this vicinity right here. That's this premium wick. So in this portion of price action, on this day, which is yesterday's trading, if we look at that like this, you want to your eye needs to be inside this little area right here. As soon as we enter that, you want to study how is price reacting when it gets to every quadrant and consequent encroachment level. Here's the tip, okay? If it can trade through the quadrant levels and it doesn't stop, like see how this right here went right to it and stopped and went lower? If you see that at anything like the consequent encroachment or the lower quadrant, and there's no bodies in the upper half or above the consequent encroachment level, then this is probably going to have a turtle soup scenario. In other words, it's going to come back down and maybe come back into this inefficiency. Okay. Now here's the $1,000,000 concept. Okay. This what I'm gonna show you and tell you about right now is how ICT literally knows how to hold on to these big runners. This is what I do all the time. How did he hold on to that 1,000-point slide? How did he hold on to that 2,500-point move here and there back in Forex days? How did I do all those things? This is it. You ready? You sitting down? Is your pen at the ready? Is your pencil sharpened? Get with it, ICT. Say it. Come on. The internet might turn off. Watch. The quadrant here, while we're bullish, the body was laid over top of it. And then we had this deep retracement. The only thing it went down to is this volume imbalance to that volume imbalance, which is what? I just taught it to you. Suspension block. It comes down to it here and then rallies up. The bodies stop below the upper quadrant, but reference that wick. It's above this candle's high and it pierced. It's colored above the upper quadrant. So anything like this is consolidation in here. For you retail ricks that like to trade bull flags and bear flags, this is when your bull flags will work because it's indicating the quadrants are being colored above. It's exploring above it. Discovery is permitted in price above the quadrants, and they're not stopping price. They're coloring above them and then coming back in. They're going above them and then coming back in. But if you look real close, the quadrants are supporting it as a discount. Below, look at the open on that candle there. They wick just a little bit above it here. All of this consolidation around it. Look at the bodies coalescing around that. Consequent encroachment. We stop it here, trade back down in, and then boom, they let the cork out of the bottle. Bang, it's gone. And if it's doing that in a market that's really bullish after creating something like this, where we have a big buy side and balance, sell side efficiency that doesn't even trade to its upper quadrant, man, you have a javelin. Like this thing is leaving. It's got someplace to go, and it ain't going to wait around for you. And that's when you see it release here. And this is one of those instances where it leaves the um, the area of focus, which is this premium wick. But when it trades above it, this premium wick acts as what? Is now a discount array. So the bodies are laying right on top of the high of it, and then they just start just letting it go higher. In your charts that I shared this morning in Telegram, you see me do this. This is the ICT New York open kill zone, 7 o'clock to 10 o'clock in the morning for all markets. You can do all. You don't need to trade London. You don't need to trade equities opening. You don't need to trade a PM session. You don't need to trade Asia. You don't do any of that. You can make your entire career just with this. How can I do that, ICT? That's exactly what I want to do. Glad you asked. Swing low. Market drops down, clears the sell side, and then leaves. What's this up here? What's this high versus this one? High probability candidate for what? A run on liquidity. So if so, what eyes am I? If we have relative equal highs like this, and watch the bodies. Did we really do the business of laying a body over top of that high? This was just a small little shallow run. That means anything that was up here slightly above this wick is unfinished business. Unfinished business is a run on liquidity that was not completed. It's just a partial, just a tiny little drop down and then leave. No. No. They want that money. They want those orders. They want that. So everyone that's short here that had a stop loss, and who would be wanting to short gold? Look at freaking social media. Look at them. They're all wanting to short gold. They want me to say, I hope gold goes down. Why? Why do you want that to happen? It's a beautiful market. It's telling you, hello, I'm bullish. Why would you want to talk against it? Like that's exactly what I was doing when I was 20. Like I wanted all the markets I was focusing on to be just, not when I first started, but when I first started shorting, because I wasn't a bear for a number of years. I didn't understand shorting. But when I first figured out how to short, I thought everything was going to drop. Every time I saw a bearish divergence, like, okay, now I understand how it works. So I wanted everything. And I hated when people talk good about something and I was looking to go short. And that's a sign of infancy. Like you're not equipped. You don't know what you're doing. If anything I say or anyone else says about a market that you hope goes one way or the other, and you lose your mind over that, just get off of social media because you're not properly equipped to be a trader, and you're not really in a right state of mind to be engaging and having any kind of discourse with other people. Because a real trader doesn't give two shits what the other person thinks about their market or their trade, or how much they make, how much they didn't make. We don't care. We don't care. Nobody cares what anybody else is doing when you're successful. Now, I like seeing other people successful, but that's a hindrance for someone that's developing. But if you have a buy side liquidity pool that's framed properly, as I give you, this is the right high needs to be lower than the high to the left of it. And when it's a buy side imbalance, sell side inefficiency, I'm sorry, buy side liquidity pool, see, that would have been an edit point right there. I would usually hit control and then M, and that would create a little marker for my timeline. And I'd go back and listen for that part and I'd clean it up. Well, I'm out here with a no safety net. So everything I mess up and say, it's there and I can't erase it, kind of like Twitter. But a low and a higher low to the right of it, that would be a candidate for what? It's a high probability candidate for sell side liquidity pool being purged. But if the market's bullish, you don't look at that like that. But if the market's bullish and it's left this, you want to see bodies plunge its way up into that. But look what they've only did what? The wick. And then it drops down. And there's people out there, looking at ICU candlestick method. You try to trade this garbage, you're going to end up in an intensive care unit trying to trade with that trash. The, and you know what I'm talking about. The market did not leave a body out there. So it's dropping down. So you're going to see that as, oh, it's a short. And the only thing it's doing is dropping down into a discount array, order block, rallies up, clears it, and then leaves the body right there. That's officially running the liquidity here. But if we look at it on a 1 minute chart, which if I do that, then I have to toggle move on thing. Just look at this area right here. Look at your 5 minute chart at 8:15 a.m. Look at it on a 1 minute chart, and you'll see what that rectangle is there. But it rallies up, and that right there, this run from here to here, that's all your model needs to be, and you don't need a job. Let me say it again, slower. If you know how to frame this setup, which is something I taught in high probability short-term trading and scalping, it's a couple videos. You don't even need to spend that much time doing anything with it. But then studying it, these setups appear every single day. Every single day. Every single trading day. This appears every day. And it occurs every single New York open kill zone. It may not be a long, it may be a short, but it's always there. You need to know where the draw on liquidity is. How can I do that? Give me a bias. Tell me how to do. You seem like you're very giving today. Well, if you're bullish because you have something like this, seeing a situation like this is a loaded deal. Easy, like it's a no-brainer. Or as Larry Williams would say in his 70s book, this is a lead pipe cinch trade. The first time I saw that in this book, I'm like, what does that even mean? Like, what does that mean? What's a lead pipe? It's so easy. It's like taking a lead pipe and smashing it in the head. Like there's no defense against it. It's easy. It's like bringing a gun to a rubber band matchup. Like you're going to fight somebody, but they're going to sting you with a rubber band, and you got a Glock, fully loaded with hollow point. Who's going to win that? It's obvious, right? It's so outmatched. Well, in my pursuit of finding the best of setups and framing it, that's why my stuff is so good, because I've spent my entire life looking for that stuff. I've filtered out all the BS. I've filtered out everything that does not work. If it doesn't have a degree of precision element behind it, if there's any kind of ambiguity, it is not in my repertoire. It is not being taught by me. It is not being no emphasis is placed on that. And that is many times what makes me offensive to most people, because they believe in their religion of what they think their indicators, or their hero that they taught them, or maybe he's passed on and he's moved on in the afterlife. But they subscribe to these views, when what I teach and I show and I can do and my students do, we rip this shit out of everything. There's nothing out there like this. There's nothing, literally nothing like this. And it's impatience on the students' part when they come here, because they want it to be easy and they want it to be fast. And they don't like when I talk like this, but this is how you get that understanding. You have to know why you're looking at this. What's the benefit? How should I look at it? When should I expect it? Notice I'm teaching you time. I'm always talking about time. Notice I'm also talking about psychology and the right way of thinking about it. Every time I talk, I'm doing that. But you're looking for buzzwords, and you're looking for how you think you should learn. And that's someone that's a self-taught mentality. And you can go out there and try to teach yourself trading, but you're going to come back to me because you didn't learn well. You won't be able to teach yourself. How are you going to teach somebody when you're ignorant? And if there's somebody you're trying to teach is yourself, you're literally saying that your ego is telling you that you know enough to know how you should be taught. Then don't watch me. Don't watch anybody. But no one's going to give you the skinny like this. They may give an opinion, but I'm telling you before the fact. And all you have to do is watch how I do it on Twitter, and I tell you exactly what's going to happen, and it does it. Now, I'm not promising you that I'm going to do it every time, every day. I don't do that. When I feel inspired to do it, then I'll do it. If it's so overwhelmingly obvious, then I'll do it. When it's really, really, really likely that I know that if I say something, Most of you are probably doing what I tell you not to do, which is trade, and then you tell me, "Look at that, I made ICT. Thank you so much." I don't want you doing that. That's why I don't do it every day. That's why I don't live stream and tell you exactly what's gonna happen, because that gets in my head. I don't want to incur risk for you because I know you're not gonna listen to me. You're gonna see me talk about something that's bullish, and you're gonna over leverage your account, and you will not have the wherewithal to stay with the idea where if I was doing the trade, I probably wouldn't have that many contracts on. I would have a stop loss on, and you don't have that experience. So you're going to hurt yourself. And then you're going to send me in a sock puppet account or in emails threats in my life, and you're going to do this, and you're going to do that, and I'm going to tell you, come over here right now, bitch, and I will kick your ass and blow your ass away. There it is. You get threats all the time from these crazy people on the internet. It's how it is. That's how it is all the time. So to protect your sanity and my time, I manage everybody's expectation at what level I'm comfortable with. So when I tell you the market's going to respect this level here, watch this right here, focus right here. And then here is the opposing side. This is where it's going to go to after it does that. That's the framework. That's how I teach. Now, everybody else that doesn't like me or I'm killing their business, they'll come at me and say, he didn't tell you to get in. He didn't give you a stop loss. He's not doing anything. But you don't even see them doing that consistently. And I'm telling you, if you're worried about that type of stuff or the opinions of others, that's going to be a detriment to your development. It literally will be a detriment to your development. So having realistic expectations, having no money on the line, that's how you learn. Anybody that tells you have to put some money on the line to learn this is an absolute ass clown. They don't know what they're talking about. They are literally just trying to sound like Billy Big Balls. And I'm telling you, nobody gets this level of understanding and comfort by risking money in the beginning because you're imposing the complication of right or wrong as an outcome filter. You're not going to walk away from the development aspect that's available to you if if you're worried about whether you're going to be right or wrong on the outcome. And that's because you're putting money on it. You have to be bored out of your mind because you do this so many times. You've done it so many times. You do it all the time, every single week. It's same process, routine, routine, routine. And looking for this type of framework here, this is an easy bread and butter model that everybody can do. But see, when you see this and it goes right here, and that's the end of the trade, you look at all this and you're thinking, this is a stupid model. Look at all the money I left on the table. Not realizing that you didn't hear what I said. This model here is an everyday model. Just like your job. When you go to work, you know when you sit your ass down, give that person that is now enslaved you, and you prostituted your life and time to them, you gave up time from your family. When you've done that, you know if you submit yourself to that amount of time and you punch the clock at the right time and got there early or got on time and you punched it out when it's time for you to go home, you know you just now logged in X amount of dollars for your time. Okay. Just as good as that's going to show up, that's what these do every day. These setups form every single day. That same level of continuity and consistency, you can expect that formation in price action. 99.99999% of everybody in retail, they don't have that confidence because they don't know what the hell they're looking for. They're reactionary. They react to price. I am not reacting to price. None of my students are reacting to price. We are reacting to everybody else's opinion of what we're doing because they think they know us and they have no idea what we're doing, who we are. We literally own this show. We own it. Look at what my students oh, forget what I do. Forget it. Okay? Forget it. And yes, I'm on my high horse because I don't give a shit whether this pisses you off or not. I gotta get it off my chest. I was driving in a car cramped up. Okay. I gotta let my legs run a little bit here. My students, people that have sat down and said, you know what, there's a lot of things said about this man. And I could waste my time listening to that, or I can just take the evidence that's presented to me and weigh it out in my own hands. If it's Photoshop, then it can't be Photoshop if I tell you before it happens and over 720,000 of you watch it happen in your charts live. How many times have I come out here and got it wrong? Give me 2 times where I ever did that. You can't find it. You can't find it. And nothing ever gets deleted. Nothing ever gets deleted. And now, see, you watch me because I'm the one man show, but I have so many students out there that are doing it too. They're doing it too. And they are growing. They're going to become pillars in this community, not my personal community, but the community as a trading industry. They will be pillars. And the way you look at me, you will look at them in the future too, because they're learning how to manage themselves. They know what they're looking for, and they don't care what ICT is doing. They don't care what new thing ICT is teaching. They have found their way, and they have said, you know what? Yes, he might be teaching new stuff. Yes, it might be great. It might be highly precise, and he may be able to do this, that, and the other thing, backflips and flames shoot out of his ass. But the bottom line is this: I am making money with what I've learned, and I don't need to do anything else. I'm comfortable and I'm content. And that's why I teach, and I've said it at the beginning in Baby Pips days, learn to be content. That is something future, and it's also something current all the time. Whatever your progress you have right now while learning under me, whatever that is at this moment, be content with that because you're learning at the right pace. Even if you don't think you are learning at the right pace. You want to be able to go out there and get 500 handles, 1,000 handles. You want to buy and sell, buy and sell, buy and sell, go directions all over the place. You want to do all those things. But what you don't realize is I am not doing that every day. I'm not doing that every day. I'm living my life. I'm doing whatever I want to do. And then when I feel like I want to sit in front of the charts, I know if I sit down in front of the charts, I know I'm going to find something. And to prove it's not contrived or made up or cherry picked or photoshopped, gambler, the bottom line is this: I put it out there in the ether, one sided, clear, to the point, levels defined, and we all watch on a short leash. It gets walked like a dog. Now, I could, I could be that 20-year-old me. Could. And I could grind all of you little asshats on a daily basis, and you would really hate me. But I don't need to do that. I don't even need to. I do this part time and I'm killing all these other guys. So the bottom line is this: you have to subscribe to whatever starting point you want to reach for that's realistic. If it's silver bullet, that model, which is very simple, it's time based, you're only looking at 1 hour of time. You're waiting for 10 o'clock in the morning Eastern time, and you're waiting for this type of scenario here. I gotta put it on a 1 minute chart. It's driving me nuts. The idea of simply waiting for one setup, one little framework of price action within a defined range of time. Very, very specific element of price action that is limited to just one specific thing. See how even the candlesticks on the 1 minute chart didn't lay over top the high? So this is that buy side and bounce, sell side efficiency on the 1 minute chart. So unfinished business in your notes, anytime a liquidity pool, when it's bullish, if buy side's been taken but no body's been left above it, it's unfinished. Expect it to come back for it again. That right there, folks, that right there, and what I taught you about when to anticipate the run through when it's aggressive and it's going to just explode up using the quadrants, that right there is worth more than I charge for mentorship. And I am not bullshitting you. That is the bee's knees, man. I'm telling you, if you understand that, you go back in your charts and look at it, study it, collect that type of information every single week. Really build an evidence log of these things happening. And you will see what I just gave you is the absolute, undeniable facts. It never deviates. It never fails. That stuff is always a constant. And that right there also tells you that these markets are algorithmic. It's an algorithm. It is literally doing, and listen, if it was all buy and selling pressure, if it was all buy and selling pressure, price would not agree with every PD array that I've ever created. It wouldn't agree. They would not be dancing on the rhythm and the stepping stones that my PD arrays give it. But the only deviations are the inefficiencies don't get fully closed in. And that's exactly what I'm looking for. And that's exactly what I'm teaching you to look for. How's that failure? It's not. It's perfection. It's scary, isn't it? It's almost like it should be illegal. How am much time is going to keep going on? This guy keeps getting it right. He's creating too many friggin' millionaires. He's creating monsters. Why is he yelling? Because you're bored listening to me rant. You're not teaching, dude. It's so annoying. Get up the road. I ain't got time for somebody like you. You're too close minded. If you don't want to jump in the plasma pool, get out of here. Okay? See you later. So, anyway, this is the pattern. This is an all day, every day. It's going to be there 365 days. If the market was open that many times, you'd see it every day. You would see it every day. Why wouldn't you want to explore that? Why wouldn't you want to take that challenge and see if it really does exist every day? Hmm. Some of you might want to take that challenge, and some of you might grow in your understanding just by doing that alone. That's how I get you. I get you just like that. I put it out there, and you don't want to believe it, and you want to find me as a liar, a fraud, a scammer. And then you can't, and you send me an email. Man, listen, dude, I just made this much money doing what I thought that you were talking at your ass, and it wasn't, couldn't be true. Couldn't be true. I was convinced it was Photoshop because somebody said it was Photoshop because they can't do it. Because they can't do it. It's too good for them. And then guess what? Guess what, Vegas? That's a compliment, baby. Thank you. Thank you. Keep shilling those fucking codes to get that money, boy. Because I ain't got to do none of that stuff. I ain't got to do none of that. I know you heard me. I know you heard me. It's all compliments. Anything they say about me or my stuff, it's always a compliment. Because if they say they don't believe it, it's too good to be true. And I tell you that's how it's going to be. When it's in your own hands, your friends and your coworkers are not going to understand the bounce in your fucking step when you're walking through, knowing that your time here is going to be short and sweet, and you're going on the road. You're going places. You're not staying at that job. You're not staying there. That's not where you're supposed to be. But that's a right now need. You have to pay your bills. That has to happen. But when you know that this is in your hands and you can make it work and you see it working daily, man, there's a spring. There's a bounce in that step. There's a rhythm in your stride, and you start strutting. You got to check yourself once in a while. You're walking to the cafeteria, it's lunchtime, and all of a sudden you're swaying. You're bouncing. Oh my goodness. I know I ain't gonna be here much longer. This guy, look at this guy over here. He's looking at me, giving me that look like, yeah, yeah, you're gonna be here just like me. The rest of the are like, no, I'm not. You don't know what I see. You don't know what I'm doing behind the curtain. You have no idea what I just did in the marketplace. And that's just one of many things that's going to repeat. And I'm going to bounce my ass out of this job. I ain't got to be here. You all have to be here. But I ain't got to be here. I'm here by choice. I'm here by schedule only. And the schedule's about time to change. And my ass is floating up on out of here to Easy Street. And ain't nobody hold me back. None of these people hold me back. Your paycheck's a fucking offense to me. I don't ever want to see that little bit of money ever again in my life. And I don't have to because I can cut my own paycheck. I can do this anytime I want. That's what's going to happen to you. That's what's going to happen to you. And the weaker side of you, the weaker side, will let it bleed into social media. And that's your mistake. Then it becomes counting pockets and not precision, consistency, and wealth building legacy. That's the trap. That's the trap. And if you can control yourself and mind your own damn business and keep everybody out of your business, you have a greater chance of succeeding. But if you don't do that, and it's hard, folks, it's hard. It's really, really hard. Because when you start seeing things happen for you, it's hard to sleep. It's hard to think about anything else. Your job is affected. Your relationship is affected. Your parenting is affected. Your health could be affected. And if you get really excited and you can't sleep because you just can't stop thinking about the opportunities that you now have control over, and yes, I said that right, you have control. You don't have to get in here every single day, but the model's going to appear every single day. Find that in any retail logic. It's not there. It's not there. But they got every excuse to tell you why. Well, the market's random. That's why. That is some nonsense. And I love it because that stuff is who you eat. That's what's on the menu. Retail. Retail. The other white meat. Remember that ad? Pork, the other white meat? Yeah, that's what it is. We're all carnivores. Nobody's a vegan trader. You either are eating or you're eating. That's the way it is. There's no vegans here. No vegans. You must consume and eat. And unless you have a way to hunt, stalk, and eat, you're the prey. You're the one consumed. You are the mark. You're the liquidity. And if you can't find the liquidity in that chart, tag, you're it. And that's for every market. That's for everything out there that you trade. I don't care about whatever willy vanilly pattern, whatever the horse shit that you out there believe makes these markets go up and down. You are going to fall victim if that's not true in your own hands, in your own model, in your way of thinking. If you're not thinking that way, you're not equipped. there's there's no Mr. Rogers approach to this, folks. There really isn't. There really isn't. And as much as I tried my life to come up with a way where it could be just very civilized, losing money makes you realize it's not civilized. It's war. It's carnivorous. It's brutal. And guess what? You need to see it that way because until you do, you're not going to respect the risk. You will not respect the risk. So, anyway, let's go back to 5 minutes chart real quick and get this part over here because I got one more market to talk about and then I got to skedaddle. So, the market uses the macro time here, right there. And if I'm not mistaken, I had it on the 1 minute chart when I put it on there. I guess so. Yeah, there it is. Equities, real time, regular time. I'm sorry, regular trading hours. That's this right here. If you are a gold trader, okay, and you don't put this information on your chart, you're trading blind, and it's information that you need to have. Okay, there's several opening prices that I think you should have. This is the part when you grab your pen and write down, put the Doritos down. Grab your pen and write this down. Every midnight opening price Eastern time, whatever asset you trade, you need to know that price. You need to know the 9:30 regular trading hours opening price when the opening bell for the stock market starts. That's this one here. So it's 9:30 in the morning Eastern time, and just label it whatever you want to label it. If you want to keep a worksheet or a workspace in your charts that you just want to have these only on a chart, that's the best way of organizing these types of things, um, like opening prices, just like that, and then put your date on it. I have all this stuff in a notepad. The the question I get a lot is, "Can you just show us your notepad?" It's the things I showed you in the chart today. I just have those in a numerical list from the highest price down to the lowest price, and I just write down in shorthand what they are to me and what one I think by my own experience is gonna get tagged. That's it. That's all it is. I promise you there's no secret formulas. There's no, expressions in algebra, coming up with some kind of calculus, result of, "Here it is." Trigonometry and all higher forms of math suggest that this is the price high and low. That's not what it is. It's every one of these wick prices and their specific quadrants. That's all I'm writing down, folks. That's all it is. I promise you, there's nothing else on there but a doodle. Sometimes I'll draw, and that's it. That's all I'm doing. I don't look at a chart with lines on it unless I'm teaching you. I like looking at the chart naked with no lines because it allows my subconscious to pick up on new information. In the beginning, it's advantageous for you to put these levels on your chart. But I also know your concern for having too many things on your chart is it's well, it's a real argument to consider. But the way you balance it is on TradingView, you can just create a workspace and you want to have like your openings at 9:30 Eastern time and then date them. Don't worry about how far back you got to do because it's easy to go into the object tree and then turn off the ones that's gone past a month or so. Okay. You're going to tell me that you got to have 20. Yeah, 20 is good. You're going to see a lot of things by having 20 days worth of regular trading hours opening prices on your charts. You're going to see shit you never seen before. He's going to like, what in the world? That was there, all that. Yeah. Oh, yeah. Midnight Eastern time, 9:30 in the morning, 6 o'clock reopen time, all assets. But yeah, but Forex doesn't, I didn't say anything about that. I said this is the time you have on your chart, 5 o'clock p.m. and 4:14 p.m. Eastern time. Okay. That's enough for right now. You don't need any more. That alone will start giving you x-ray view of price moves that you've never seen before. They're there. And the model I just outlined here, that little simple little crackerjack of a model where it's just simple, unfinished business, it repeats every single day off of one of those opening prices too. Oh no, he just did it again. He just gave away. Yeah, I did. Wait till you wait till you get the books. What in the world? At a candy store. What I go into next? Yep, that's what it's gonna be like. It's gonna be like just like that. So good. So good. Can't wait. But anyway, here's the equities opening price here, and it trades down to that, and you get that run here. But then let's scrunch it up. Can you tell I'm having fun? I miss talking to you guys. My wife's not here, so I can really cut up with you. She'll give me the hairy eye if I'm like that, and she's in anywhere in the house. She'll come around and feel like, "Is that necessary?" I'm like, "It's ICT necessary. It is. It's definitely necessary. It has to be done." But we see it trade down into the macro of 2:50 p.m., 3:10 Eastern time. Now, let's zoom in here because I really want you to see. This candlestick comes in at 3:08, so 8 minutes after 3 o'clock Eastern time. But this is gold, and it's the last trading hour of equities, right? For regular trading hours. Gold's going to behave just like this when it's animated. Now, normally, when there hasn't been so much fever around gold, you wouldn't see big runs like this, but you would get some kind of a little setup that can be traded on a 15-second, 30-second, 1 minute chart, 5 minute chart, that type of deal. But don't expect like big, huge payouts. But because it's so animated right now, because it's so like energetic, it's trying to get somewhere and it's moving a lot, you're going to get these really nice responses like that. Like, I mean, look at that. That's a beautiful response. What do you think that is right there? What is that? That's that what? High probability candidate for a run on liquidity. Here's an inefficiency. We trade down into it. Can it get to consequent encroachment or halfway point? Well, you could see it without having any fib on it. Here's halfway. Here's quadrant upper. Did it touch it? Nope. And it's rallying. This easy draw hits it. Not yet. Right there. Keep your eye on this down here, okay? Boom. There's that larger 5 minute. Same pattern. Flat top right here. Easy, easy sucker play. This is when the bull flag guy's like, yeah, it's going to go higher. comes right back down to that level right there. That was a sound effect with my tongue. Okay, so don't send me message. I heard ICT just let a fart. There we go, and it just keeps going higher, and it gets up to this level here, and then it comes all the way back down to some random 9:30 opening regular trading hours price. Again, look at that. And then what does it do there? It sweeps it. It clears up the liquidity below here, and then rallies up. Old fair value gap. Picks it up here. What level? This is gold, guys. You said this shit doesn't work in gold, right? You clowns over there on TikTok. ICT stuff doesn't work on gold, bro. Dude, you don't even know what you're talking about. Like, you have no idea what the fuck you're talking about. What's this price say right here? 4,116.5. Oh my goodness. What is the price low on that? To the tick. To the tick. Elliott Wave. Tell me something. Dan, talk to me. Supply and demand. Where art thou? Wyckoff, please tell me something, baby. Because Ajax ain't got nothing on me. I'll put something on your ass that Ajax won't rub off, and it's called precision. You can't touch this shit with anything else out there. It ain't there. Nowhere to be found. This guy loves himself. He talks about this stuff like he's a rock star. No, but when you live 33 years with it and you see it and you know it like the back of your hand, and these assholes out there that don't know what they're talking about entertain you, and you just want to remind them that they know nothing. You know nothing. Now, my students are learning. The least of my students could ragdoll these guys to get here and talk shit. And I just come out here once in a while just to remind you, it's by choice. Anytime I want. Anytime I want. But there's a trading competition, ICT. You ran away. You went up the main. There's people saying I didn't go. Fuck your competition. In one fucking trade, I killed everybody cumulatively. Where the fuck are you at? Fuck your leaderboard. Fuck your leaderboard, you bitch. That's right. That is right. Talk it. Talk it all you want. I'm walking it, bitch. Anytime I want. Here's what the market's going to do. And we all watch it. Done. When's it wrong? I'll let you know. I'll let you know. So anyway, gold, it apparently works in gold, but I'll leave it up to you to decide. It's up for debate for now. I'm going to suspend my argument on it and say I believe it works in gold. But it's up for you to determine if there's any validity to it or not, okay? NASDAQ. All righty. And then we're going to go to, is it 1 minute? Yeah. NQ. Yeah. Tuesday. Midnight price. Right. There. Okay. I'll zoom in a minute. Just right now, I just want to have a little bit of data on the chart. Some of you guys are offended. Did ICT just say the F word? Yeah, I did. And I repent every time I do it. But I'm a sinner just like all of you. Okay. Bottom line is this. Daily chart last Friday, literally controlled demolition. Okay. I'm going to say something to you. Okay. And I want you to just think about it. Not just hear me here and come up with your own conclusion right now while the live stream is going on. But I want you to think about it the rest of the week. Okay. What time of year is it right now? It's in the fall. In the fall, stocks generally make a low and then they go higher into some measure of these are the last week of January, maybe the first or second week of February. And then it creates some kind of short term, intermediate term high and then Starts either if it's a bearish at that point, then it starts working towards the April, May highs, and then this works its way down through the summer into the fall lows. But we're in a market that is being propped up. It's primarily bullish. There's no one can argue against that. But if it's in a primary bull market, it can't trade down to a fall low like we would expect in a normal, you know, non-parabolic, bull market. So wouldn't it be suspicious to see how on one day they did a controlled demolition, just like 9/11, and then now we went up here yesterday, and now we're right here, and they used this old discount wick low, perfectly delivered there, okay? And look at this candlesticks right here, the September 25th. What's the low? You're going to look at this price right here on my cursor right here. What's that candlestick low? 24,422.50. Okay. Over here this morning, this candlestick right here, it's low, 24,421 even. So it hits it, trades minimum one tick below it for spread aspect. But look at the reaction there off of that. And then we have this inefficiency, which I think, if I'm not mistaken, was yeah, I just messed to move that up. There we go. Here we go. This is this very reason right here. This is what I'm doing is the number one reason why I like doing pre-recorded videos because of my attention to detail. I like to have the chart look exactly like I want it. I don't like to see half a candle being shown here. So I don't like having to zoom in front of everybody while we're doing it live. But this is the inefficiency that you see on the 5-minute chart. And it trades down into it here. When we have a wick like this candlestick here and this right there, whenever it's a old inefficiency, I look at this as immediate rebalance the same way. It's immediately rebalancing because it's going right back to the top of the inefficiency, which is this candlestick's opening price here. It need not trade down to that. It's doing the same function as a candlestick to candlestick touch. Like in other words, if this candlestick's high touched this candlestick's low, that's immediate rebalance. This is the same element of immediate rebalance because it's using the inefficiencies high as the immediate rebalance. It's going right down to it doing like that. And even though there's a small little gap, guess what that's telling you also? Would you want to see that close in if it's bullish? If you're bullish and you wanted to see it go higher, would you really want to see that if it touches the high of that inefficiency? Would you really want to see that completely close in based on what I've been teaching? No, you wouldn't. Why? Because it's indicating that it doesn't even want to give that discount there either. And that's exactly what I call it a signature for. Smart money sees that and it's like a flag to them. It's like a big alert. See, you look at price action indicators and things crossing over, becoming overbought, oversold, and that's a catalyst for you to make a decision, an action point for you to react and do something. Smart money doesn't have that because it's all horseshit. What it does is it knows where price goes below an old low. There's liquidity down there. They're not looking at depth of market. They're not looking at level two. They're not doing any of that shit. They know that there's liquidity down there. They're taking that liquidity, absorbing it, buying it, and then they're looking for continuation setups like these things here where it tells you it's not likely to go lower because it's leaving these portion of price action open. What's this? Relative equal highs. Right high is lower than the left. This is a strong candidate for price wanting to run through. Same thing here. High, lower high. Big, big bulletin board, like going down the road driving on an interstate. And you see these bulletin boards advertising gas stations, businesses. If you're in driving through New Jersey, that shithole of a state, everybody wants to sue everybody down there. I'm injured in Jersey.com. There's so many lawyers advertising in Jersey. It's unbelievable. I was telling my wife, I was like, look at this place. Like everything here is literally about suing somebody about a car accident. Did a truck driver go by too fast? Call us. We got something we can put on their ass. Yeah, it's nuts. Well, in price action, these PD arrays and the signatures they provide you is like a big billboard sign like that, advertising. This is what you should be expecting. This is what you're looking for. But everybody's looking for patterns. They're looking for individual candlestick patterns. They're creating new forms of ranges. There's no advantage to that. You want a time based candlestick because the market is driven algorithmically based on time. If you skew any information that is linked to time, you have greatly diminished your effectiveness in terms of timing the market with the process that it uses for protraction. When the market starts to run, this is this is protraction, where it just starts to escape and run. And it runs above those relative go highs here and it continues to go higher. But I want you to see how it uses this old discount wick. When price was up here, it opened and traded down through previous days low and into the new week opening gap, which is this candlestick's close and this candlestick's open. Go back to a 1 minute chart. If you're learning from this and you can see past the rant because I'm just having fun, um, give it a thumbs up and it'll encourage me to do more of them. It doesn't mean I'm going to come out here every day now, but the uh, the candlesticks bodies are respecting the high of that 5 minute inefficiency that you can't see on the 1 minute chart. See how it's all muddied up? It rallies up, and then now look what it's using here: 24,582.25 upper quadrant of this discount wick. Okay, so the 25th of September, we're trading up to and above that upper quadrant. Look real close, folks. Real close. We trade to the low of that wick on the 25th of September, right there. Nails the low of the day. ICT says he can pick the low of the market. I was doing that in Forex over and over and over again. Over and over and over again. And they were trying to say I was using a what's it called? What's it called again? It's escaping me. A rented white label server, which is apparently a real thing. But I never did that. I never had to do that. Am I using some kind of manipulation when I put it on Twitter and X before it happens and it does exactly what it's outlined in my tweet or post to the very levels immediately after I post it in the direction I said I was going to go? How many times have you seen me do it? If you were in my mentorship group that paid me, I was behind a paywall where these people would have roasted my ass in public and said, oh, he's a liar. He can't find a trade. He can't do this. He can't call the market. He can't do that. He's wrong all the time. That was never happening. I was in the high 90% bracket for years. And I had to do something with them every single day. Every single day. That's unheard of, folks. That is unheard of consistency. And these fucking clowns out there talking about he doesn't have a track record. Bitch, I will run circles around you and moonwalk on your shit just like that. Okay? I'm getting older. I'm slowing down. That's all. I ain't forgetting shit. I know how to do this. But it hits that low and stops. And then it rallies up. And it does something strange, unheard of. It climbs above the lower quadrant of that discount wick right there at 24,475 and 3/4. Take a deep breath. Ground yourself. Ready? This is how easy this stuff is. This is why it's just easy for me to go out here and to do this. And my students are learning to do this too. So it's transferable knowledge. It's not me out here talking all this shit and trying to sound powerful and I love the sound of my voice and it's all ego trip. I'm being funny. You may not like the humor I'm using, but I'm having a great fucking time with it. And I don't care if it offends you. These quadrant levels, whether they're on an inefficiency, like a fair value gap, or an actual gap in price where there's no trading at all, or it's a wick, which we treat the same way. Both of those things, I guess technically would be three things, right? No price at all is a vacuum block, which is no, that's a real gap. There's an inefficiency, buy side imbalance, sell side imbalance, buy side inefficiency, SIBI, BISI. Those are fair value gaps. They're inefficiencies. And then you have the candlestick wicks. We treat them the same way. We grade them. Listen to me, listen to me, listen to me. I read these assholes on another channel today, and I love doing this. If I didn't know what I was doing, this would really break my heart and it would hurt me. It would hurt my feelings. And admittedly, I'm not trying to be funny. If I didn't know what I was doing, some of these comments would genuinely hurt my feelings when they say fair value gaps are trash. They don't work. They don't ever work. And I'm going to tell you, young men, okay, you masters of the fine art of virginity, I'm going to tell you something right now that's going to help you. It's going to help you in your pursuit of that perfect lady that you can wine and dine and finally afford more than the fucking dollar menu at McDonald's. Here it is. You ready? Every high probability fair value gap, every fucking one of them lays on top of a quadrant that I've been teaching you since I started back here again. Look, real close. What do you see at 24,475 and three quarters? What do you see? What do you see? Ready? We went down to the low of that wick, and then it starts to go higher and pulls back to this quadrant. In your mind, okay, how's ICT going to think about this? What's the internal dialogue of ICT? What's the inner musing of ICT? Hmm? Well, if we wrote this down, well, well, shit, then I can use an imbalance on the pathway down. That means, well, this is one right here, but is it on top that quadrant level? Mm-mm. No, Virginia, it's not. But look, look, what do you got here? Oh, look at that. We got this one right here. You see that? Well, boom, boom. Where's the consequent encroachment of that fair value gap? At the fucking perfect level on that quadrant. Is that one thing telling you? Nope. Is it all by itself? No, it's not. It's telling you that right here is that sweet spot. And you can accumulate along right there. And you need not concern yourself with this bullish breaker. If it's bullish, would it want to wait around to come back for a bullish breaker? If this is a V bottom? Nope. Rips right through it and leaves this right there. And YouTube mentors with my stuff in their mouth will say, I will really love to take a trade right here if it can come back and trade into that because it broke structure right here. That is the worst fucking bit of advice you could ever take from somebody trying to talk like me. You might have my words, you might have some of my vocabulary, but you have no idea what the fuck you're talking about. This is what you want to see when it's bullish. And here's 930 right there. Okay. Keep going forward. What do you see right there? What is that? What is that? Holy smokes! That's that shit he said first present the fair value gap. Oh my goodness. I already pick it up in the force. The Jedi Knight knows exactly what's going on. You're all vibrating right now. First present the fair value gap. Just happens. It just fucking happens to lay right on top of the upper quadrant of that discount wick. ICT cherry picks the perfect fucking PD arrays all the time. It's got to be Photoshop. It's got to be hindsight. He's got to be using 30 fucking laptops. He's got to be doing it. I can't fucking sleep. How is he doing it? I love it. Here is, oh man, you're going to fucking love these books. Ready? Here's the low. And here is, watch this. You're going to tell me, you're going to tell me that buying and selling fucking pressure. You're going to tell me that that shit just so happens to match the fuck up with consequent encroachment. And if you don't see it that way, here's your fair value gap laying right on top of the halfway point or consequent encroachment of the first percent of fair value gap. Now, roll that film footage back on X when we were trading right there. I said 24,660 relative equal highs too smooth, or smooth edges to that effect. And I said, watch new week opening gap in here. That's right here on this candlestick. Don't take my word for it. Grab the very tweet or post on X that I said that. Copy the link to it, and then go to TradingView, right click with your mouse button when you're looking at the chart like this, and it'll lay my tweet right down on that candlestick right there, and it will say what I just said. And then the market does something completely fucking random. Something nobody on this spinning rock could have ever known about. They never could have saw it. They never would have had the foresight to be able to say it before it happened. They never would have said it was going to do this very thing, because nobody can time the market. Nobody knows what price is going to do. Nobody can predict the future. Nobody. And my fucking middle name is nobody, because the market goes up and trades right back down to that new week opening gap high and does what? It leaves, takes off. And then we get first percent of fair value gap. It becomes an inversion fair value gap because it's SIBI here. Now remember, I'm down here. I'm calling your attention to 24,660. So let's do some simple deductions here, okay? I'm going to help these guys that don't understand when I post something, it's very specific. It's not ambiguous. It's not both sides of the equation. It's literally me saying 24,660 is going to be tagged. And it's going to start and originate off of new week opening gap high. There's no fucking way you can twist that in any other format. There's no way you can do that. You can't say I'm looking to go short. You're not looking for lower prices, ICT. You clearly said you're looking for 24,660, and you're looking for the new week opening gap high as a kickoff. Yes. Does your chart looks like that? Does it look like that? I didn't even mention the first percent of fair value gap because I'm in there before. You don't need to be down here. You don't need to be here. You don't need to be here. You can be right there and do very, very well. The problem is when you see me teach this way, you may be doing this really, really consistently and doing it well. And then you see, you're trying to tell me that you went long here and you added here and you added here and you added here and you got out. I want to do that. That makes you hard to teach as a student because you're not content with enough. Every little bit of progress that you have needs to be championed in your study journal. You cheerlead yourself. You speak positive things about what you're learning and how empowered you feel by having learned it. And even if you don't see it real time, you want to go into your journal and say, this is what I see in the charts right now, okay? And then you write it in your journal like you saw it. You are lying to yourself, but in a positive way. You're encouraging yourself. Say, it would be no different, okay? It would be no different if you had your small son or daughter and they were trying to do something in some kind of activity or sport. And you're going to tell them, hey, look, You didn't win today, but you did so good. You're don't worry, you'll get them next time. How the fuck do you know that you're gonna get them next time? You don't. But you love that little child because they're yours and you wanna build them up. You don't look at that as a fucking lie, but it is. You're lying. You don't know what the hell's gonna happen. The next time could be worse. But you're doing what? You're instilling encouragement. You're nurturing that child who you love. Well, guess what? Until you are a fucking ass kicking fucking one man army, you're a child as a trader. And they have to be nurtured. They have to be guarded from these evil pieces of shit on the internet that don't do anything but work at 7 to fucking 11 or pump fucking gas. They got opinions about everybody else. When you're small and you're insecure about what you may or may not know about trading, you're easily influenced by the opinions of other people. Even if you know deep in your heart that they're probably bullshit, you are hurt by them, by the things they say. That's why I tell you, listen, it's your choice. You can listen to other people's opinion about me, listen to it for a little while, and then watch what I'm doing, and then see which one holds the weight. Okay, hold your hands out, shit in one hand and wish in the other. See which one fills up first. That's the way you weigh this bullshit out. Because if I don't know what I'm talking about, you're gonna see it real fast. But if I do know what I'm talking about, you're gonna see that shit real fast, consistently, over and over and over and over again. And then you're gonna understand, oh shit, no wonder his fucking students are the ones that always make the fucking money. No wonder he's the fucking guy that put these fucking people in positions where they no longer work. But you're gonna listen to these asshats, these clowns, these people, these fucking stupid motherfuckers that are so ate up with misery. They wouldn't want nothing more to see more people join their ranks and say, yeah, ICT is a fucking fraud. If you are weak minded and you don't really want to do this, join them. Talk all the shit you want about me because all that does is bring more people here and then they witness what you see me do today, what I did in October 1st live stream. Every time I talk about the fucking market, it's marching to this Pied Piper's fucking tune. I told you, I'm not going to come out here and fucking look stupid now. Okay, I'm not going to do it. It's not in me. It's not in my nature to do that because I know there are so many people around the world, millions of fucking people. And I know it's millions because most of the comments that are left in my channel are left by people that are not subscribed. And I almost got 2 million people following now on the viewership subscription side of it. I know what I say has weight. I know it's going to influence a lot of people. I'm not going to take some guess. I'm not going to come out here and talk about something that I haven't already talked about and taught. So that way, when I say things like I said today, any student that's been following me just for a month would have knew exactly what I was saying today. And then you see other people that are brand new. They're like, I don't understand what he's talking about. And you see other people say, yeah, I was just like that too. I'm so thankful I understand what the hell he's talking about. I understand his language now. That's what you get when you spend time studying. When you listen to the videos and you take notes. You don't watch the videos listening for, tell me when to buy, tell me when to sell, give me a signal, give me a setup. Man, get the fuck out of here. Get out of here. Get out of here. I don't have any interest in doing that. I want to teach you how to find this shit on your own. That's what I'm doing. I'm not telling you, here, eat right now. Here's a meal for you right now. I'm giving you a gourmet fucking kitchen and a whole pantry stocked with the best choices of cuts of meat you've ever had. And all you have to do is sit your ass in the kitchen and make whatever it is you want to make. Ain't nobody around here going to be able to tell you you can't eat on your own time and by your own hand. That's the power of being able to take this stuff and making it yours. That's why I'm here. That's why I'm not getting fucking paid. That's why I'm not stopping. That's why I do it. That's why I do it. Because I know there's a lot of you out there, they've tried everything else and you failed. Because everything else is bullshit. It's all dog and pony show. Sure, they might get once in a while get lucky here and there, but nobody is this consistent? Else. Nowhere. It ain't no, you fucking find them and you bring their fucking asses here. I promise you, I will fuck their asses up publicly. Live stream. Bring your Mickey Mouse shit and I will fucking moonwalk all over you. But they never do it. They got all these side quest bullshit. Well, let's do this, let's do that. Fuck all that. Sit your ass out here every day and tell us what the fuck it's going to do to the tick. Then you got a voice. Now you get either the stone cold side of me or you get the fucking mild mannered, well, he's soft spoken and blah, blah, blah. You pick. What the fuck do you want? What do you want? You want Rocky Road or you want fucking vanilla ice cream? Whatever the fuck it is, tap into that. Because I can do it the ugly way or I can do it the nice way. But when I listen to stupid fucking people listening to fucking dumb shit sent to me in a fucking email, I saw this guy talk about you this and he talked about, man, do you even fucking pay attention? Do you even listen to the things I'm fucking talking about when I do the reviews and I tell you this is what I think the market's going to do? It's going to do this. It's going to use that. When I type this shit out into a text that's time and date stamped on X and nothing is ever fucking deleted or edited, do you ever fucking pay attention to that? Because if you aren't paying attention to that, then you can't be a fucking trader. Like you're missing the obvious shit. And that's what I get most of the time in my comment section from people that are just wanting to be, spoon fed signals and setups. If I believed in my heart, okay, listen to me. If I believed in my heart that that would make you independently wealthy and you'd be able to learn how to trade by doing that, man, I would fucking do it. I clearly know what I'm doing. Every time I talk to you and show you where this is going to go, how it's going to behave, I used to sit out here and do one candle at a time. It's going to do this. Watch, it's going to do this. It's not going to do that. And it would fucking do it. Like time traveling. There's nobody else out there, folks, doing that shit. I want to see, I want to see Al Brooks, who people say, oh, I stole his shit. Bullshit. Bullshit. I want to see Al Brooks call every fucking candle, where it's going to go, stop, it won't do this. I want to see that. Every bit of respect to the man. I don't know him, really, I don't know him, but I want to see that. If he fucking live stream, I would be in attendance every fucking day. Every fucking day I would be there because I want to see it. Hearing people say that you can do it. See, it'd be different if I just always said, I can, and I never did it. See, if you tell a lie big enough and long enough, people will believe it. But when you tell the fucking truth all the fucking time and you can get out here and walk that shit anytime you fucking want, it's undeniable. It's undeniable. And that's where I live. I live in the Truthville. I don't live in some Mickey Mouse made up land, some shit. Okay. I don't rely on all of you to talk for me that's none of this shit's real. I can come out here and do this anytime I fucking want. And I want you to realize that yes, this is not the appropriate way of doing it for all audiences. And I understand that. I understand that. But it pisses me off, not because my feelings are getting hurt, but it pisses me off that some of you let these ignorant pieces of shit tear down the joy of you pursuing something that if you just took fucking one day and realistically weighed out the things I'm putting out here, is there any truth to it? I don't give a fuck what they say about me. I don't care. I don't sleep with my fucking eyes waking up every 5 minutes. I wonder if they're gonna think about that. Fuck that shit. I sleep like a baby. This shit is not gonna stop working, okay? It's not. When the market stops being traded freely, then it won't. There's your answer for that. But it pisses me off that people, I followed your channel. I've been watching you for a couple weeks. And I really like what I'm seeing, but I saw this guy on YouTube. I see this guy, he's got videos about you and this, that, and other thing, blah, blah, blah. I'm like, okay. I don't have time to reply all of you. I don't. I don't have time to reply. So I'm going to say it this way. Before you sit down and you want to send me an email about the conflicts that you're having internally, about whether you should learn from me or not, if you haven't studied where I'm calling the market, and I put that shit on Twitter, I did it in Telegram, and all you have to do is whenever I make a post, Come right behind that post, whatever post it is, and say, hey, calling on all paid ICT mentorship students. Did this guy really, for years, call the market in front of you all with a high 90% accuracy every single day for years? Or is that just a myth? And let them sound off. Okay? That's it. And collect your information, your evidence, your data about what it is I'm teaching, what I talk about in the marketplace, and how the market behaves immediately after that. You have the easiest litmus test to know whether or not that I'm a waste of time for you or not. And I mean that sincerely. I don't personally care if you come back and watch my videos. I don't care. I don't care. But it bothers me that I see people that have such a defeated mindset that they would give the power of choice, freedom, and pursuit of excellence to some strangers on the internet. That's what social media was created for, influence, but not to build you up. It was to defeat you mentally and divide us all. And I don't give a shit about anybody's opinion about me. I don't care. I know who I am. I know what I can do, and I know why I'm doing this. And none of you have an answer for why I'm doing it because you're looking for there's got to be an out. Yeah, but you make so much money in ad revenue. The bullshit. I don't make hardly nothing. I make hardly nothing. It's shit money. Last Friday, smokes all that stuff. And why am I making 15 fucking videos a day? I could listen. If I was hungry for money, okay, this has turned into a Twitter space. In case you haven't noticed it, if I can make all this money in ad revenue, why don't I do a London Open review, a New York Open review, an equities morning session review, a London close recap, and then a PM session, and then an Asian session video. And I could do all that shit. I can make the charts real quick and have it all done in a 5-minute trainer video and then pump it all up. I got a life, man. I have a life. If I want to make money, I push a couple buttons. It's done. It's it. It's over. It's done. But I don't have the energy or the time that I had when I was a younger man to make all the videos and all that because I've done a lot of teaching. It's on my literally it's on my YouTube channel. And you want to find a shortcut to all those videos when all you have to do is just pick one playlist and start with it. And there's not none of it is really the wrong starting point because they're all going to be talking about the same things eventually. And repetition is required. If you really want to know something, you need to have some redundancy to it. And when you talk to these people with the attention span of a gnat, because they've been programmed from TikTok, it's got to be 30 seconds or less, or they're not getting right to the point. I'm sorry, dumbass. Okay, but you can't take something highly intelligent like this, where you're competing against the highest intelligence in the world who controls the financial markets of the entire fucking globe, and you want this to be condensed and distilled down to a fucking TikTok. Get the fuck out of here. I have no tolerance for stupid people. And that is stupid fucking shit right there. I have no tolerance for that kind of shit. I had people paying me and they had that mentality as students in mentorship. The 2021 group, what the fuck? That was the biggest fucking mistake I ever did when I opened it up for that last year for 2021. So many people begging, please, 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 please. Man, I let that fucking group in and I had a whole bunch of fucking crybabies, okay? Oh, you're not telling us when to buy and sell. Man, I'm literally fucking telling you how to get in there. All you have to do is do what I'm showing you right here. It doesn't change. It does not change. It's the same shit. If a fair value gap doesn't have a rule based idea that indicates when, hear that? When. That's a time based element, not fucking where. Where is highlighted by the inefficiency by the fair value gap. That's the visual representation, something that you can expect. How did he know? I can't sleep. Does anybody know? Can you help me out? How did ICT know a fair value gap was going to form there before it even fucking happened? How did he know that an inversion fair value gap was going to form there before it even fucking formed when I did it on the daily fucking chart of the dollar index? Holy shit! I just taught it to you. I just taught it to you. How much did you pay for? How much just got charged on your credit card to learn that lesson? Oh man, I had to listen to all this bullshit. You could have told us that in 10 minutes at the end of the video. I have other things to do. Fuck you. I don't care to know about what your fucking opinion of me. Every time you send something like that to me in a comment, you're broomed. I don't ever see your shit again. You say it on X, goodbye. You're a low intelligent piece of shit. You can't see value for what it is. I'm literally giving you gold. And not even, you don't even need to thank me. I used to ask for that. Fuck you. I don't need your thank you. Literally just go do it, make money, and feed your fucking family. Okay? There you go. I don't want nothing back. I don't want anything. I just want you people that are struggling, that you sold yourself short. You listened to this fucking world that said this is all you get. And you better be fucking thankful. Man, kiss my ass. Fuck your job. Fuck your college. Fuck your bullshit. I'm going to make whatever the fuck I want to make. That's how it's got to be. You got to get out there and take it by force. But you can't be guessing. And retail is a bunch of bullshit guessing. It's academia wrapped in bullshit guessing. Plethora of books on a bookshelf. Fucking books out the ass. None of them are worth shit. But I paid good money while working several jobs to get these fucking books. And that's the only reason why I can't bring myself to fucking burn them in my fireplaces. I hold on to them for emotional support because I know I've conquered everything else. Nothing else out there can fucking stand against this. Not even close. You can't predict your fucking indicator's timing when it's going to give you your signal. You have to sit your ass there and react while you wait and wait and wait. And then you react. I'm anticipating. I know where my fucking shit's coming. I know exactly what time them motherfuckers are forming, and I know at what fucking price. And if you haven't picked up on that fucking skinny by now, man, today it was your fucking wake up call. I know exactly what the fuck is going on. And everybody else out there chasing their Mickey Mouse bullshit are chasing illusions. That's exactly what they're doing. They have no system. We don't. That's not a fucking system. That's a recipe. I'll give you that. Add this, add that, check here, pick of that. If it does this, if it does that. And if it feels like I'm doing it, let's take my straight. Then there, okay. That's inconsistency. It's the epitome of retail logic and thinking. If the technical science doesn't line up like this, my ass ain't taking a fucking trade. And you get that? There has to be something else behind the scenes. Behind it. There has to be something behind the scenes. Just because that fair value gap looks like it's there, if it ain't laying on top of a fucking quadrant that can be classified as I'm teaching you over a couple weeks, real price action, real, before it happens level shit. I did it on daily charts. I've done it on 15-second charts. I've done it on a fucking 5-second chart, a 1-second chart. Whatever the fuck they asked me to do, I've done it. But you can't do this, you can't do that. Man, I've done all that shit. How about you show me just 5 fucking days in a row where you call a fucking move, where it starts and originates and ends exactly where you say it's going to happen when you say it? Because only my fucking students can do that. Sorry, not sorry. So, yes, I'm peacocking because I got some really good fucking emails from students that have absolutely fucking crushed it. It feels good, man. It gives me a fucking high. It is so good seeing other fucking people that don't give two shits about being on social media. They don't need your accolade. They don't need your pat on the back. Oh, wow, look at you. You did that. They don't need that. In private, this is what I've done, Michael. I learned this. I applied that. and this is my model, and this is exactly what I did. Here's the fucking receipts, real receipts. Man, that feels good. That feels so good. And yes, I'm Mick Jagger and all around this fucking place today. Can you hear it? Can you hear it in my voice that I'm excited? You're damn right. It feels good because I know what they're doing and so many other people that you've watched in public forum, you can do that same thing and more and more. You're just starting. You're just starting, man. You have no idea what you can do. And I promise you, whatever you think the height of your successes can possibly reach, it ain't enough. It's not high enough. And you'll understand that when you get to that level. And you'll be like, man, I was really underestimating myself. You have no idea the power that's in your hands right now. You just got to get better at using it. That's all. That's all it is. But today is a masterclass. Today is PhD level revealing. This is the shit that separates the horse shit on YouTube, TikTok, Instagram, Discord, Facebook, in Twitter, X, whatever, what the fuck whatever it is you want to name. These guys and gals out there that pretend and they talk about the left side of the chart all the time, all the time. Now you know. Now you know how ICT picks the very fair value gaps. Which one works? Which one doesn't? And when you read these assholes leaving comments, yeah, fair value gaps, they don't work. Laugh at them. Yeah, I'm not saying you got to go online and troll and bully them. That's not what I'm saying. But just laugh at them. Pity them. Because this video is for free on my YouTube channel. And because of their stupidity, their ignorance, and they're just completely against doing what's being told to all of you, sit down, roll your sleeves up, and watch. Watch the videos, take notes. And some of you are probably thinking, all this video and all this ranting and bullshit, and you're wasting my time. Fuck you. How's that work for you? Because what's going to happen is you're going to get to a point where you feel like you ain't going to get it, and you need to be cheerleaded. You need to have your shit calibrated, and that's what this is for some of you. Because I have students that once in a while smash it, and then they do dumb shit. They go back into doing bad habits, influenced by social media, and they want their shit corrected. And that's exactly what this is. I'm calibrating their ass. That's it. That's all it is. It ain't for you. That part of the message ain't for you. So when you leave me comments, whether it's on X or in email or on the comment section of my YouTube videos, and you talk to me with that bullshit, just know that I'm saying fuck you and I'm blocking you. I don't see you anymore. Like, I'm not losing sleep over you. You see me slowing down? Fuck no. I'm still the same man. I'm same man. I can come here anytime I want and do this shit. Ain't nobody timing the market like me. Ain't nobody telling you what the fuck it's gonna do. This perfect, but me. And I got students that are doing so fucking great that I can't wait to see where they go. I'm telling you, they are going to be absolute fucking superstars. Super fucking stars. And you could be one of them. All you got to do is, for free, study and take notes and take the pursuit of this serious. Don't let other people influence you and make you second guess or doubt yourself. Honestly, man, if I saw what I do in 1992 when I first started doing this shit, if I would have saw anybody doing what I show you, well, there's no fucking way. There's no fucking way it's fake. There's no way. There's no fucking way that you can fake beforehand. This is the level and this is where it's going. Bang. And that's all it does. That's all it did is that every single fucking time this person says this, this is what it does. Clearly something's going on. Clearly there's an advantage here that is superseding everything else. It's now set precedence that everything but this is bullshit. And that's exactly what motivated me. When I didn't know anything, I knew If anybody on this rock was going to figure it out, it'd be me. And I couldn't. I couldn't. And then when I said, I will submit and lay down my ego and lay down my pursuit of wanting to be somebody, and I'll be a servant. I may not be polished, but if you look at what Jesus used all through the Old Testament as God when he selected men and women, man, that's a list of people that you wouldn't expect them to do what they did. Moses was a murderer. David was an adulteress or adulterer and literally had the woman's husband put on the front line so he could be with his wife. And that's a man that God says after his own heart. Hmm. So when you look at me and you're judging me, you Christians, oh, look at how you're talking. Yes. And then when I'm done this, his spirit will be laying on me heavy and I will be repenting, just like you should be doing for judging me. I know where my weaknesses are. I know where I have work to do, and it never ends. But if it wasn't for him gifting this to me, this understanding, pointing these things out to me, no man ever wrote a book, made a video course, sat me down and said, this is where this is doing this. Is that. No man has did that. No man has ever done that. In Jesus Christ's name, that has never, ever, ever, ever happened. But that still quiet voice said, look here. Listen, I'm convinced that there are some very, very smart individuals in the world, very intelligent people, very, very superior intellect, and they would never find these things, but they're there. What's the chances of that happening? And why is it that I'm attributing it to someone otherworldly and not just me? Because I could do that angle. If I was the piece of shit that some of you really think I am, I could really, really use that angle. Being in teaching circuits, going all over the place, making millions of dollars a week, milking all of you, and you would gladly pay it. How about that? I know it because you're all begging for it in the email still. I got people texting me my personal cell phone number. Please, I will pay you $30,000. I will pay you $50,000. I'll pay you $20,000 and send an NDA. Listen, I'm not doing that anymore. I'm not doing it anymore. This is the medium I chose. It's it. You either sit and learn for free or you don't learn. That's it. That's the economy here. I don't need anything from you. I don't want your thank you anymore. If you want to tell me you're the greatest in all time, I am not going to like your post, and I'm going to set your focus on God. Don't praise me, praise him. I don't care if you're an atheist or not. I don't care if you're a Muslim. I don't care if you're a Hindu. I don't care if you are any other religion. If you praise me, I'm going to correct you and tell you you need to give that to God because that's who deserves it. That's where it came from. And I don't care if you believe that or not. I don't care. I could care less what you believe. But as you can see, the market comes all the way back up to consequent encroachment of this wick, 24,738 and a quarter right here, 743 and three quarters. It trades there and keeps diving deeper into all of this inversion fair value gap. Now, think, I'm going to close the video or live stream rather. If we're in the fall, and I believe everybody in at least this part of the world would agree that, we're in the fall and seasonally stocks make a low in the fall. What would it look like if we're in a primary bullish market and the fall low, the seasonal low formed in a bullish market? What would it look like? Couldn't it? I'm not trying to hard sell it right now, but just think about it. Couldn't it have done it in one fell swoop like this and cleared any trailed stop losses below these lows, below this low, below this low, below that low, and changed where it went back into the last change of state of delivery here with this down closed candle? And then we opened up here and rallied up, and then we had one more attempt to make it look like it was gonna go lower again today, and it stopped dead in its tracks on a level that I teach you, discount daily wick low, and then everything has been straight up since then. Look how it's just maneuvering around the consequent encroachment of that inversion fair value gap on the daily chart. Look at that. Isn't that neat? This is time distortion. It's like a holding pattern. You wanna be trading not in these periods. You wanna wait until it moves again. It's not breakout. You wanna wait for it to start running. When the market goes into another stage of protraction, then you'll see PD arrays form again. And if it's suggesting it's gonna continue higher, or if it's retracing deeper lower, regardless, the PD arrays that form after leaving time distortion. You don't ever wanna try to trade in these consolidations because you're not gonna be apt to be correct in a limited understanding that most of you have right now. And I don't mean to be condescending. I'm trying to be careful on how I say it because I want you to be encouraged, not defeated. I don't want you to feel like I'm talking down to you. Anytime I'm talking down or argumentative, it's the people that are doubting on the outside of our community, or I'm taking those individuals that are doubting themselves to the woodshed, and I'm trying to shake them by their lapels. Like, listen, stop thinking ass backwards. You can do this. It's transferable knowledge. You can do it. But you're just trying to be unrealistic with the expectations and the time horizon that you're trying to operate in. You want it quick, and you can't make it happen quick. It takes time to study it. It takes time to look at charts and see it repetitively over and over again. And that's why I tell you to warm up to the idea like meditation. Meditation is for a trader, back testing and journaling. If you don't want to do that, I promise you learning this is going to be harder than it needs to be. And it's going to take you longer than you want it to be. Every successful business, all of them have a business plan. They revisit that business plan periodically. They have board meetings and they say, okay, how can we improve? How can we cut costs? How can we, you know, be inventive, creating new services or products or new ways of doing something? And by having a journal, you're constantly measuring your progress. You're measuring your KPIs, your key performance indicators. Every business has this. Every business that's successful cares about these things. But when you see these people that have been brain rot from TikTok and YouTube shorts, give me everything I want in the least amount of time because I ain't got time to waste on you. Nobody worth teaching anything has time to waste on you. And you need to hear that. And I don't give a shit how that makes you feel. The level of entitlement today is off the charts. And when you care enough about yourself to say, you know what? I don't want to half ass this. I want to do this the right way. I don't want to second guess, do I really understand it? I want to know that I know that I know. I want every intricate detail that's made available to me. Think about it. Wouldn't you want to learn from any other world caliber athlete, artist, musician? If you could spend time with Jimi Hendrix and have him coach you on how to play the guitar, like, wouldn't you want to? You would spend as much time as he made available to teach you whatever he's going to teach. And if he wanted to talk about all the times he smoked dope and all the girls he ran around with in the middle of it, you would endure it. You would endure it because you know that that's something that you can't get, and that's what you're all listening to. And I'm not trying to be egotistical about this because nobody else has this. Nobody else has this. If they did, God's honest truth, I'd say go learn from them too, or go to them. But it's not like that here. And I know because I've taught for 3 decades plus, I know how people think. I know how they learn. I know how they build up these barriers to their understanding, and they do it to themselves. It's self-defeating. And most of it's impatience or unrealistic expectations. And I can't fix that. That's something you have to work on. And this society today, this generation, they don't identify it. It's you have to give it to me. And if you don't, you know, you're an asshole. You're not worth listening to. When the reality is you're not worth teaching. You're not worth investing my time in because you're not teachable. You need to fix some things and then come back when you're ready. And then this relationship between mentor and mentee is going to be fruitful in your hands. I have limitations as a teacher. I am cognizant of where those limitations are, and they're external because I'm not without the desire. I'm not without the energy level of being able to do it. I'm not certainly running out of content or the ability to teach things. I have shit tons of stuff, and it works perfectly. So much so, I guarantee you, people are scratching their head thinking, there is no fucking way this guy is doing this. You're right, but I am. But I am. And I have students all around the world doing the same thing. I'm not the only one that last Friday this happened to work out. I have students all around the world that did fucking crazy returns. Hello. What's preventing you in the future being a part of those ranks? It's just a decision. Either you decide that you're going to do it or you're not going to do it. And I'm going to leave it to you whether you want to do that or not.